Investors and traders, welcome to the channel Market Chart Pattern. Today is 17th of September 2023 and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the US financial sector, in which we are going to take a look at the regional banking index, which contain the stocks for the banks, regional banks, smaller banks. We will then also take a look at the XLF, which is the ETF for the banking sector, and then we will also take a look at the key US individual banking stocks. This video is for educational purposes only and it is not a financial advice. So what we are looking at is the daily chart of the Spider S&P Regional Banking ETF, KRE. So in this, what we have been watching for quite some time, I do apologize that we are doing a video on it for after quite some time, but the patterns that we were watching, they are still valid as they were valid when we were forecasting for those levels. So what we were looking at was we were looking for a ABCD formation here highlighted in this a red line, and then we were also looking for this was a potential area where the market could actually find some resistance. So we were watching for 38.2% Fibonacci retracement, and then we also had this ABCD completing a little bit higher to the 49.87 level, which was the 50% retracement. It's a 50% retracement of this swing highlighted in this black dotted line. Now what seems to have transpired is that the index or the stocks in that index collectively, they did rally. So the index did rally to right up to the 50% retracement, ABCD pattern formation, and it has been moving lower and has been moving lower since 27th of July. So that's been quite a while, and what we can also see is right at the top we have a descending 200-day moving average. So from a momentum perspective as well, the 20-day moving average below is 200-day moving average. So the stocks in this sector do look under pressure. So what we are watching now is actually on the downside. If we just draw a retracement, it is between the 38.2% and 50% retracement. But what we can see is that over the course of last week, the stock, this index has just gone nowhere. It's just consolidating here, but the chances are maybe perhaps it's moving lower to maybe even $40 per share level. But this looks weak. Now let's take a look at the XLF. So the XLF is moving in this channel formation higher. In fact, this yellow shaded area which you see here, we had identified a key pattern formation here, and our expectation was that as long as price remained above that, we were anticipating for a move higher, and this is exactly what has transpired, and the this index has been moving higher, but look where the rally stopped. It stopped right at the 78.6% Fibonacci retracement of the previous high here, and now what we're watching for is this trend line, this one in dotted shaded area, and if the price breaks below that, then the chances are that it will be another ABCD pattern formation, which could shorter term take it to $32 per share level, and the bigger ABCD, as you can see, even moves slower. But for now, we'll just wait and watch this trend line. Now we'll just move to some banking stocks. So we will start by looking at Goldman Sachs. So for Goldman Sachs, the bearish symmetry, in my opinion, is still operating here, although the pattern that we were watching did break. So these black lines that you see, every time there was a rally of this much magnitude, the sellers would come in and the stock would move lower. However, we were also watching this region between the 61.8% and 78.6% Fibonacci retracement, so anywhere between $320 to $312 per share level, and we identified as a key support because of this region here. And we were looking for a ABCD rally higher, which actually did transpire right into the zone to watch, where it found resistance and has just come down. And if we just take this market symmetry concept again, and we just take this one, project it from here, the rallies were almost equal. So this means that there is still pressure on this stock for the Goldman to be break this pattern, in my opinion, which is this bigger pattern, the stock should rally above $370 per share level. Then we could be looking at an ABCD, a bigger ABC to the upside. But for now, it seems to be making a top underneath this top, and there is a possibility we have this ABCD right here coming towards 270 $280 per day, 277 to $280 per share level. And if this low is broken, then of course we have this blue shaded area in play around $240 per share level, and that's where we have a really strong support, because the number of things coming together here. So it might be just possible that the stock might be heading lower, but of course we have to watch these support areas in between. Now let's move to JP Morgan. JP Morgan has been one of the stocks, banking stocks, that has been doing quite well. It broke out of this trading range, went right up to this 78.6% Fibonacci retracement from the highs of 2021. And now what we're watching is this red trend line. If the stock breaks below that, then we have the 200-day moving average just below that, around $140 per share level. But the chances are it'll be making an ABCD to the downside, right, filling this gap again. But for now, we are just watching for the trend line here, this red trend line. Let's take a look at Citigroup. So this has been one of the weaker banking stocks, and look here, the market symmetry concept, ABCD. You can just visualize this. So many times it happened, it finds resistance, and now it's going and challenging these lows again. From here, the expectation would be perhaps some sort of a not a perfect double bottom, but a potential one. So there could be a bit of a rally. What we are watching for is this 38.2% Fibonacci retracement. So it could get up to 43.71, maybe even 42. But last Friday's price action looks like it might be just heading lower as well. And if these lows, they're broken to the downside, then the potential for the stock to move much lower will come into action. Let's take a look at Morgan Stanley. So Morgan Stanley was also one of the better ones because of this trend line in the blue shaded region. However, after finding support from 61.8% Fibonacci retracement, it's just done an ABCD kind of a pattern right here. And it looks like, based on the price action, maybe it's going to go and test the $78 per share level, or maybe even the the lows of the July of 2022. And we'll basically be watching this. There is a bigger pattern formation, which could in fact see the stock go to about $65 per share level, where we have a number of confluence levels coming together. I'm not gonna go in the details right now in this video, but in the previous videos we have. So there's a possibility that this is where the stock is actually going if these support levels are broken. Now let's take a look at the Bank of America. So the Bank of America stock, it found a very nice support early in March. That's when Federal Reserve came out with their massive, well, not that massive, but about $300 billion rescue package because of what was going on with the Silicon Valley Bank and a few other banks, regional banks. And what we have seen is basically a sideways move to a corrective move right here. And we could in fact also, there's like a nice channel coming here. So initially I thought maybe it was possible it could do an ABCD higher and actually test the upper boundaries, but it has just found resistance. Let's take a look at if there was some ratio involved in that. So it just rallied about 50% of the highs of this, and then from this one, okay, let me just make it a little bit clear. So rallied to about 61%, 61.8% Fibonacci retracement here, a confluence of two ratios coming together. And what we have seen is the stock move lower. Now here, just from a support perspective, let's take a look. The stock is close to about 78.6% Fibonacci retracement. In fact, this is where it found some support from. So it could maybe just trade sideways from here, but if this support gives way, then we will be looking for the lower boundaries of this channel could be perhaps tested. And of course we have the 78.6% Fibonacci retracement come here at the 24, so roughly $25 per share level. So we have identified a support zone, so there's a possibility, in fact it looks like that this is where the stock might be going, somewhere in between 26.50 to about $25 per share level. Now let's take a look at the Wells Fargo company. So the Wells Fargo one is a very interesting one because it has been just moving lower for quite a while. This was also a banking stock which was hit with some scandals in the past, but we are not going to talk about that. We'll just look at the technicals. So what we were also watching for was this the concept of bearish symmetry. So every time the market rallied by about this much, this much, this much, and in this instance not as much, even a little bit less, the sellers came in and the stock did sell off. So in fact what it did is, if we look at these pink lines here, it did an ABCD 1-to-1 projection here, and in fact it is also a 3 drives to a top pattern just below this top here, and it has stopped very close to the 61.8% Fibonacci retracement, but remains under pressure. So if I were to, let's say, just draw what was this rally to, and we just get our favorite 38.2% Fibonacci retracement. So it just rallied to about 38.2% retracement here. And one of the things about 38.2% retracement is that in strong trending markets, this is where the perfect amount of resistance come in, and the stronger the move is to the downside than if it finds, in fact, fails to rally and take out this 38.2% Fibonacci retracement. So in the shorter term, we might be actually looking at a 1-to-1 projection right here, which could actually see the stock go back and test this lows again. And of course we have a retracement coming in around $34 per share level, and that is going to be the 61.8% Fibonacci retracement. So it looks like, in fact, the stock might be actually trending lower towards this $34 per share level, but of course we have to watch for the support levels in between till the stock reach that and complete that pattern formation, and we'll keep you updated. So these are the pattern formations, the price levels that we are watching in the key US stock banking stocks, and the ETFs for the banking stocks, including the regional banking index. The regional banking index is really important because, as we have seen over the course of last 18 months or so, that the interest rates have risen a fair amount in a short amount of time, and these regional banks provide financing to smaller companies, and also in terms of the banks, their balance sheets are not as huge or fortress kind of balance sheets compared to big bulge banks like JPM or Goldman Sachs. So the interest rates do hurt them quite a bit, and in fact because they provide financing to a certain kind of a sector in the economy, those get hurt as well. So we need to keep an eye, a keen eye on this index, and if the price action dictates lower prices, that could have an impact on the overall stock indices as well, a video which I will be doing later today and posting, so keep an eye on that. So thank you very much for watching the video. I wish you good luck and good trading, and have a great weekend.